Nvidia is not the smart money anymore. While everyone else is piling in at all-time highs, Wall Street's biggest funds have quietly started building a position in one under-the-radar AI stock most retail traders don't even think of as AI yet. Over the past 30 days, I've gone through their filings, traced where the capital is actually flowing, and the same ticker keeps showing up. In this video, I'm going to reveal what that stock is, why institutions are loading it up right now, and how it could be your best AI play this year. Let's be real. The AI boom has created a paradox for us as investors. We know this is a multi-trillion-dollar revolution that's going to change everything. But at the same time, it feels like we've missed the boat. The poster children of AI, stocks like Nvidia, have posted absolutely life-changing returns. But buying them now? It feels like showing up to a party just as the lights are turning on. The fear of missing out is real, but the fear of buying at the top is even scarier, to be honest. That feeling is getting worse in the current market. Here we are, November 2025, and while there's some optimism back in the air, there's a problem. A flood of money has poured into ETFs, and with companies doing buybacks and acquisitions, there's simply more and more money chasing fewer and fewer good opportunities. This scarcity is pushing the prices of the big, obvious names to the moon, leaving most of us feeling stuck on the sidelines. You're either forced to chase stocks that are already up thousands of percent, or you're left digging through a pile of speculative penny stocks, hoping you'll find a lottery ticket. It feels like there's no middle ground, no safe, smart way to get a piece of the explosive growth of AI without taking on some stomach-churning risk. But what if I told you that's the completely wrong way to look at it? What if the biggest opportunity isn't in the companies making the headlines, but in the companies that are making the entire AI revolution possible? The true smart money isn't betting on a single gold miner. They're buying the company that owns the entire gold rush, the land, tools, and the infrastructure. And they're quietly building their positions as we speak. To find these kinds of opportunities, you have to learn to read the signals Wall Street's biggest players leave behind. I don't mean talking heads on TV. I'm talking about following the capital. When you see the world's largest institutions, the Vanguards and the JP Morgans of the world, increasing their stakes, you should pay attention. When you see a company making massive strategic investments that are directly tied to the future of AI, you should really pay attention. The secret isn't finding the face of AI. It's about finding the spine. Think about it. AI isn't just code floating in the cloud. It has a physical, tangible home. It lives inside massive, power-hungry, hyper-connected buildings we call data centers. Every single time you use an AI chatbot, every time a company trains a new algorithm, every time an AI model generates an image, it is happening inside one of these digital fortresses. The demand for this infrastructure isn't just growing, it's exploding. And that brings us to the core idea. The most durable, long-term way to play the AI boom is to invest in the non-negotiable infrastructure that underpins the entire ecosystem. We're talking about the digital landlords of the 21st century. Companies that provide the physical space, the power, and the connectivity that AI simply cannot exist without. The best investors know this. They look for the critical players in the AI infrastructure build-out. And the beauty of this strategy is that you don't have to pick which AI software will win. You don't have to guess which model will dominate. By owning the infrastructure, you win no matter who comes out on top. You are the house. And right now, all the quiet signals are pointing to one digital landlord in particular. All right, finally, without further ado, this is the company that my research shows the smart money is moving into for the next phase of the AI boom. Drum roll, please. The company is Equinix. The ticker symbol is EQIX. Now, you might have heard of Equinix, but I'm willing to bet you don't think of it as an AI stock. You probably think of it as a boring real estate company. And that is precisely why this opportunity exists. While everyone else is distracted by the latest AI app, Equinix is quietly building the physical foundation for the entire industry. So, what does Equinix do? Simply put, Equinix is the world's digital landlord. It is the largest data center REIT on the planet, with 272 data centers in 76 major cities around the globe. Think of the internet as a collection of giant, bustling cities. Equinix doesn't just own buildings in the cities, it owns the premier locations, the central hubs where every major company, from cloud giants to financial institutions to the new AI startups, needs to be. Here's the hidden AI angle most people miss. AI is creating a tidal wave of demand for faster processing and ultra-reliable connectivity. And Equinix is at the epicenter of this. Just this month, in November 2025, Equinix made a landmark move, appointing a new Chief Data Science and AI Officer, Yang Song, to embed AI across their platform and unlock new revenue. This isn't a company sitting on its hands. It's aggressively positioning itself to be the engine of AI. The proof is in the spending. The CEO, Adaire Fox-Martin, recently said that companies are moving past just experimenting with AI and are now going into full-scale integration. To meet this demand, Equinix is ramping up its spending to an unprecedented level. They are planning to spend up to a staggering $5 billion a year through 2029 on new data centers for AI workloads. Their ambition is to bring as much new capacity online in the next 5 years as they did in the past 27 years combined. They are quite literally doubling down on the AI revolution. So, why is now the perfect time to look at this stock? It comes down to the quietly buying part. Despite these incredibly bullish fundamentals, the stock has actually fallen about 15% this year. This dip was driven by broader market concerns, not problems with the company itself. Because of this, some deep dive analysis suggest the stock could be significantly undervalued, creating a potential discount for new investors. This is the kind of setup professional investors dream of. You have a world-class company, an undisputed market leader that is the backbone of a generational tech trend, and its stock is on sale. This is why Wall Street analysts have a consensus strong buy rating on the stock. Out of 29 analysts covering it, 24 rate it as a buy or strong buy, with average price targets suggesting a potential upside of over 22% in the next year. This is the quiet signal. You don't see it on the front page. What you see are the biggest institutional investors in the world owning over 90% of the company. You see them beating earnings estimates. You see a disconnect between the stock's recent price and its incredible future. That is the opportunity. If you're getting value from this deep dive and you want more analysis on these kinds of hidden opportunities that fly under the radar, do me a huge favor and take a second to hit that like button and subscribe to the channel. It's a small click for you, but a massive push for me in the eyes of my AI overlord, the YouTube algorithm. Now, before we wrap this up, let's talk about something that gets overlooked way too often in fundamental deep dives, the chart itself. Because sometimes the market leaves fingerprints long before the headlines catch up. Equinix has been riding a broader rising channel ever since late June 2025. And the most recent pullback, it dropped the stock right into the lower boundary of that structure. This trend line isn't random. It has been a reliable demand zone for months, the kind of level where bigger players quietly reload. And right now, we're seeing price react from that exact same area again. But here's where it gets interesting. Before tagging the channel floor, Equinix dipped just low enough to take out the recent swing low, a classic sell-side liquidity sweep. That's the market flushing weak hands, triggering stop orders and offering stronger buyers a discount. This is a textbook move in an otherwise healthy trend. Now, I'm not going to sugarcoat it. The momentum indicators are still short-term bearish. MACD is under the signal line and the histogram is expanding downward, which tells us downward pressure hasn't fully released yet. If we do bounce here, the recovery is more likely to build than explode, at least initially. But the long, lower wick forming right above channel support, that's buyers showing up. That's the market saying someone wants this level. If Equinix can stay above the 780 area and stack some bullish candles in the next few sessions, the next natural magnet sits around $810 to $830. Where previous structure and mid-channel resistance line up. On the flip side, if we break decisively below the channel floor, that's where the trend thesis cracks. For now though, the reaction at support tells us something simple but important. The market hasn't given up on Equinix. It's pausing, reassessing, and waiting to see who steps in next. Shout out to my bro Tommy from Tommy Trades. Check out his channel if you are interested in more expert technical analysis like this one. So here's the conclusion. The thesis for Equinix is simple, but it's incredibly powerful. The AI revolution needs a physical home, and Equinix is the world's premier digital landlord. While other investors chase hype, Equinix offers a picks and shovels approach, setting itself up to profit from the entire AI ecosystem's growth. The company is signaling its aggressive pivot to AI through massive capital investment and strategic hires. And most importantly, despite its dominance and powerful tailwinds, the stock is trading at a discount, offering what I believe is a compelling entry point for long-term investors. The overwhelming consensus from Wall Street analysts is a strong buy, suggesting significant upside from here. To win this next phase of the market, you have to think differently. You have to look for the companies that are quietly laying the foundation for tomorrow's technology. Stop chasing the headlines and start investing in the infrastructure that makes those headlines possible. And by the way, the other crucial thing to invest in is knowledge of AI tools and how to use them. So please, again, hit the subscribe button and join us in our community channels on Twitter or Telegram to stay up to date on how to forge alpha with the help of AI. Of course, please keep in mind that I'm not a financial advisor and this video is for educational and informational purposes only. The market is the forge and your research is the hammer. Thanks for watching and see you in the forge.